Pick up on the markets now, and the local market, including the currency, will be hoping to maintain yesterday's wins today. The rand firmer, the most in 6 months on Tuesday, and rallied, or should we say the JSE rallied along with its global peers after the United States consumer inflation numbers came in better than expected. Let's speak now to independent markets analyst Jimmy Moyaha, who's going to help us understand the market moves in early trade. Jimmy, good morning to you, sir. That quick overview of how things are faring at the JSE.
Morning, Coley. Morning to the viewers. You're absolutely right. Markets are absolutely loving the US CPI print that came out yesterday. The print came in slightly softer than expected, which is a significant improvement considering how sticky inflation has been globally. But it points to a much larger picture that we could potentially see rate cuts sooner than what was anticipated. We're now starting to see that there's early rumblings of potential rate cuts being priced in from as early as sort of the second quarter of next year, and the growing possibility that it might not just be one rate cut, but more than one. So still very early to tell, obviously, because it is just one data point. There are other points that need to be looked at over a consistent period of time. But if you look at this data point coupled with the jobs print that came out at the start of November, that is all pointing towards signs of a slowing US economy, which could point towards the US Fed potentially holding off on rate hikes and starting to look at how this is filtering through into the economy. The local, or the international markets rather, had a really good response to yesterday's print, with Nasdaq closing up about 2.3%, the S&P 500 closing up almost a full 2%. In Asian session, Tokyo was up about 2.5%, Hong Kong up about 3.8% or so, Sydney up about 1.5%, and you're seeing that is filtering through to the rand, or the local bourse rather, in terms of our trade. The all shares up about 1.4%. Resources is continuing their charge, leading the movements up about 2.2%. They were up about 4% yesterday as well, and they have been under the most pressure as a result of the global sentiment and the global risk-off feeling that has been in the markets of late. So it's nice to see them starting to rebound. Financials up about 1.4%. This is all, of course, still in very early trade. The market has been open for less than an hour. We will hope to see that this continues throughout the day and that we have another positive day on the local front there. In terms of the currency, as you rightly mentioned, the rand strengthening quite significantly. I mean, we were at 18.12 at one stage. We went all the way up to 18.80, almost 19 rand. We're back at 18.22. So that 18 rand target is looking very, very attractive at this stage, and it looks like it might come back within reach before the end of the year. Hopefully, this is the momentum that we can maintain to breach that 18 rand level. In terms of commodities, Brent crude is pulling its own weight and doing its part on that side. It is up about 0.1% for today, but it is still below $85 a barrel, sitting at $82.60. Gold price is sitting at $1,970 an ounce. That's up about 0.5%. That's been sort of on and off with the strengthening or weakening of the US dollar. We're seeing that the result of yesterday's CPI print has really given the dollar some weakness across all majors. I mean, if you look at the euro dollar, if you look at the pound dollar, that's also weakened slightly. Might not be as much as what we've seen in the past, but the CPI print was definitely positive for risk sentiment and for indications that the US economy might not have as many rate hikes going forward and might actually start cutting sooner than we expected.
Yeah, let's immediately launch into company news. Woolworths publishing a trading statement for the 20 weeks ending 12 November 2023. What stood out for you from their numbers?
A couple of things stood out. Performance has improved since they've completely gotten rid of that David Jones business that was weighing them down quite significantly. They had an increase over the 20-week period of about 4.7% in terms of their turnover sales. However, if we look at the sales on a total basis for the group, that's down about 22%, And the group has just, Woolworths has just said that that is as a result of coming off of a high base last year, and the moderation is expected. It is normal. I also had a look at their Country Road business. That seems to have had a sales decline of about 8% or so in terms of just overall sales, and then that has been kind of offset in large part by their online business, which has done exceptionally well, hitting double-digit sales growth across all regions and contributing more than 5% towards group revenues. So it seems as though they're really benefiting from that online business. Their food business has been resilient as well, but Woolworths, much like Brait, much like Santam, much like all the other companies that are reporting now, are reporting that the headwinds that they're contending with in South Africa, the higher costs of living, the sustained interest rate levels are having an impact on the business. Woolworths also commented that the taxi strike in the Western Cape contributed towards some of the decline on their side in terms of pressures, and then the avian flu impact that we had also affected their poultry business and their food business with regards to the Woolies food portfolio. So the business over the 20-week period is showing steady growth in certain areas, marginal growth. Some areas are declining, but overall, coming off that high base, I think they're remaining quite resilient and still alluding to the fact that those pressures are things that are beyond their control, and they're trying to make the most of that situation, which is a very common narrative that we're starting to see out of some companies that are contending with these headwinds.
Yeah, Brait's results are also out for the 6 months period. And how did they fare?
As I said, they too are saying that a lot of the consumer pressure is being felt within their business, but despite that, they gave a good overview of some of their portfolios. I mean, Brait, if you'll remember, has, or 65% of Brait's assets are that Virgin Active portfolio. That's doing well. That's increased its membership, I think, by some 10% or so, active members. So they're continuing to do well. And it's spread out across many geographies. So if we look at the South African business, which is 37% of that Virgin Active portfolio, that's increasing its numbers despite the fact that consumers are under pressure and the conditions in South Africa aren't the same as their other regions. The Italian business, the UK business, the Asia Pacific business also all doing really well there. Premier is the other asset that they have. They've got, I think, 24% of Brait's portfolio is Premier Group. And if, for those that don't know, Premier Group is relisted on the JSE for the first time in about 18 years back in March. I spoke to the Premier Group CEO around their interim results just this week, and those results were absolutely stellar. Earnings before interest and tax was up about 24%. The business is doing really well, and they're positioned quite well to continue going forward. So that's going to be quite a beneficial asset or portfolio within the Brait stable, and it's going to continue to add a lot of value going forward. This is just their first interim reporting period. Full year results will be out in March for Premier. That'll obviously add to the dividend that Brait will then realize from that. Brait's also still got about $1 billion in cash and facilities that are available, and they're looking to see what they're going to be able to deploy that into. They've also got other investments to the tune of some 35 million rand sitting in a legacy private equity investment that they're benefiting from there. So the bulk of the business sits within the Virgin Active and the Premier portfolios, and both of those are doing well.
Let's talk about Santam's operational update for the 9 months ending 30 September 2023. Those are out. Talk us through that performance.
Yeah, so those numbers came out late yesterday, and the gross premiums were up about 4%, which is always a good thing for insurance businesses to be able to underwrite more premiums, and premium growth as well was up about 7%. The business did, of course, give an indication of the impact of some of the claims that we've seen, and they said that there was about 200 million rands worth of claims incurred as a result of the Western Cape floods, and a further 100 million was lodged at Broker Solutions in the 3 months ended, I think, September 2023. So that's about 300 million rands there worth of claims that they still need to, or that have affected the business. The business has intend, or they've announced that, or they announced in May rather, that they intend of disposing of the Allianz European business. They had about a 10% interest there, and that effective date, I think, was around September, and the proceeds of that was around 2.6 billion rand. That would then come back into the group, and they'd be able to redeploy those funds elsewhere. So a fairly stable and strong business update from Santam. They've said the prospects going forward, even though continued environments might be challenging for them, they still think that their underwriting performance is going to do really well. It might be under a bit of pressure as a result of the conditions, some of them being weather related, not even related to macro environment, inflationary pressures. But I mean, if you just look at this week alone, there was those hail claims that they commented on following the hailstorm that we had at the start of the week. So those sorts of events are going to be events that Santam can't really do anything about. They are prepared for in terms of claims and processes, but I think the frequency of those events is going to be something that they can't predict or anticipate at this stage, and they're hoping that the claims aren't severe as a result of them.
Yeah, let's conclude with Netcare. Anything surprising from that company's numbers in the period under review?
Netcare will officially drop those numbers on Monday. I will also be getting in touch with the Netcare team to see how those numbers unfold, but just an indication that came out around their headline earnings per share and basic earnings per share as a result of the obvious requirements from the JSE as listing requirements. If there is a degree of certainty that these numbers are going to be at least 20% from where they were in the previous reporting period, whether up or down, they are obligated to inform us as investors, and that is exactly what they've done. Earnings per share is expected to be up anywhere between 29 and 32%. Headline earnings per share anywhere between 35 and 38% on the upside. So that's very positive from their side, but we'll only really know what the specifics of those numbers are on Monday when they release the official results, and then we'll be able to take a look at those and see how well they did.
Jimmy Moyaha, independent markets analyst. Thank you.